Hey guys, I'm back with another daily update video today. It is still during market hours. I wanted to make this video a little bit earlier because I wanted to watch the SpaceX launch that's happening in about 45 minutes. It is Wednesday, May 27th. It's still during market hours. It's 3:51 p.m. so we have about 10 minutes left. And just taking a look at the big board here, very similar and very weird day, similar to yesterday. And if you just take a look, all the tech stocks were again either trading sideways or trading a little bit down. But this doesn't tell you the whole picture, because I think what's happening, or at least one theory, is that a lot of the people that were in the tech stocks, because tech has just been going up even during the pandemic, the thought is that since it's the end of the month, people are now rebalancing their portfolio, meaning they're cashing out their tech stocks because they've been profitable, and now they're putting that money into other sectors that were kind of beaten down by the pandemic, because they say buy low, sell high. Well, they're selling the tech stocks high now they're buying the other stocks low. So that's one thought process of why there's been a huge kind of dip in tech. And if you know from my prior video yesterday, you know that I'm essentially 100% in tech this week because I sold 5 contracts of AMD. And very interesting graph on AMD. But if you just want to take a look at the tech sector again for today, we can look at the power shares QQQ, and this is the ETF for the NASDAQ 100. Take a look at it, and we can see that the graph for QQQ looks nearly identical to AMD today, and that's kind of what's been happening with tech all day today. So in the morning, basically opened where they closed yesterday, but then we had a very strong downswing up until about 11 a.m., 10:50 a.m. I'm not sure what happened at 11 a.m. Maybe all the tech stocks in the sector heard about the SpaceX launch today and they wanted to be like the rocket ship and just take off to the moon. But yeah, we had a very big drawdown in the first couple hours this morning. But then we have this essentially V-shaped recovery, right? Here's your V-shaped recovery back up to not only where we opened, but even a little bit higher. So if we go back to AMD, because that's where all of my options plays are on this week. So if you remember from my last video, I sold 5 options yesterday, and I sold 2 contracts at the $52 strike price, and those are puts, and I sold 3 more puts at the $50 strike price, and all these puts expire this Friday, so in 2 days. And I mean, this kind of describes my roller coaster of emotions, because we closed the day above $53 yesterday, and I said, all right, that's fine. My 50 and my 52s are still safe. But then the market opened and we just crashed hard. I mean, we were dipping 52, and I said, all right, well, I'll plan on getting assigned my $52 strikes, but at least my 50s are safe. And we ended up hitting a low of 49 and some change. So at this point, I was thinking, all 5 of my contracts are going to get assigned. So that's going to be 500 shares. So I wanted to calculate my cost basis. So I said, all right, if I have 52 for my 2 contracts, then 3 contracts at 50 divided by 5. So my average cost basis is going to be $50.80 per share. So that's not bad. I was in AMD previously for $51.75 and I ended up coming out profitable. So I would be in it for even less if AMD closes above 50, or sorry, closes below 50 by end of day Friday. But like I said, AMD is a good stock, so I'm not very concerned about it. But right now, I mean, AMD started creeping up, and it's right now, I mean, the market's about to close in 5 minutes, but it's 52.63. So as of right now, all of my contracts are safe. So I really hope that yesterday and the fear this morning was the extent of the tech drawdown, and now we'll either trade sideways or go back up for the rest of the week. And that way I can collect my $200 in premium safely and not be assigned any shares of AMD this week, so I can make more plays next week. But again, we'll see what happens. And I just wanted to say, somebody made a good comment or asked a good question in my last video, and they asked how I was preparing or what my plan was, or if we go into another recession and the market starts dipping again. I mean, first of all, I think we're already in a recession, because for a recession you need 2 consecutive quarters of negative GDP. And we already had Q1 of 2020 in the negative, and I think for sure Q2 of 2020 is going to be in the negative. So I think we are in a recession. We just haven't confirmed it yet. We'll have to wait till the second quarter numbers come out. But I think it's a matter of time, and this is just my personal opinion, this is not any financial advice, and I certainly don't have all the answers, but I think at some point we will get into a recession and maybe even a depression, and I think the market is going to dip even harder than it did back in February or March. I don't think it's going to be as fast, meaning I don't think we're going to hit circuit breakers, because I don't think the Federal Reserve is going to allow that to happen again, but I think we're having a very slow bleed, maybe over the course of months or even years. And so if that happens, I think the way I trade options by selling weeklies is good. And I say that because I like selling weekly options because I can get in and out of trades very quickly and not hopefully get assigned shares and not be forced to pay more fees and commissions and buy those option contracts back to close them out. So my thought process behind that is, for example, if I only sell weekly options, I'm only giving the stock 5 days to move against me. Whereas if I buy options that are 2 weeks, 3 weeks out, or if I sell options that are 2 weeks, 3 weeks out, or even a month out or longer, a couple months out, I'm giving these stocks way too much time to try and move against me. And then I don't want to, one of the popular ways people trade is that they will sell contracts that are, let's say, 30 to 45 days out. And then once those options are 50% profitable, they'll close the contract by buying it back, or they'll close the option by buying it back. But I don't like doing that because you're just going to end up paying more fees, and I know the fees and commissions are minimal. But this way, I can get more trades in, because options trading is all about statistics. And for example, when I say I want to have a trade on that's at least an 85% chance of profit, that's 85%, in the long term. For example, if I have a coin and you have a 50-50 chance of being heads or tails, if I flip the coin once and I get heads, and I flip it again and I get heads again, that's unusual, right? Because you would expect the first time to be heads and the second time to be tails, or vice versa. But if you do it enough times, if you do it 1,000, 2,000, 10,000 times, then you will get close to the 50-50 ratio. And I think it's the same way personally with trading options, where if you only, let's say you just sell 1 month contracts 12 times a year, so you do it once a month, that's only 12 times you're flipping that coin. If you sell weekly options, well, now you flip that coin 52 times. So I think statistically, let's say you always sell contracts that have an 85% chance of profitability. Well, if you do it enough times, the numbers say that you should be correct 85% of the time. But if you just trade once or twice, you may be wrong both times because you just don't have enough occurrences. So that's another reason why I like to trade weekly options. But also, like I said, I don't want to give the stock enough time to move against me. And my plan is to slowly pick farther and farther out of the money strike prices if I think we're in a recession, because then there's a less chance of me getting assigned shares of stock. And although I won't collect them as much premium, I can still kind of ride the stock down. And if I do get assigned shares, I'll get assigned shares at a lower strike value than if I picked a strike that was closer to the money. So that's my strategy, and that's just how the wheel strategy works. I think the real risk with the wheel is picking a stock, getting assigned shares, and then the stock just plummets. Because then if your stock price is much, much lower than your cost basis, it's going to be very hard or not even worthwhile to sell covered calls on it to make it worthwhile, because the premium is going to be so low because it's going to be so far out of the money. So I think by selling weekly options, even if you get assigned shares, hopefully the stock can trade sideways or go up a little bit, and you can get out of those shares the following week. So I like to get in and out very quickly. If you've been following my videos, I don't want to hold anything for a long time. I don't want to hold an option for a long time, and I don't want to hold shares for a long time. Now I think, let's say we are in a recession, let's say we bottom out, now I do want to hold the shares, right? AMD is trading at $52. Let's just say, let's fast forward 6 months and we're in a big recession, and now AMD is trading at $15, right? That's a steal for AMD. So at that point, I would want to get assigned AMD shares and then sell covered calls on it. But then I don't want those shares to get called away. I want to ride AMD back up to 50 60, 75, wherever it wants to go, but then also collect premium along the way, because then I collect premium on the way up, and then eventually when I sell, I get all of that stock appreciation. And if I end up holding AMD for over a year, on my profits, I would get taxed at the capital gains rate, which is less than the short-term gains rate. So that's kind of my overall strategy, is to just get my cost basis down on all these stocks I'm trading and try not to get assigned. And if I do get assigned, I want to get out quickly, because like you said, or like I said, I think we are due for a recession. I think we're in a recession. I think we're due for a dip, but nobody knows when it's going to be. I don't think, like I said, it's going to be a very quick dip. I don't think we're going to hit circuit breakers like we did back in end of February or March, because I don't think the Fed is going to let that happen. But that's my overall plan, is to kind of play it safe, sell far out of the money puts, try not to get assigned, and if I do get assigned, get out of the stock as quickly as possible, and don't get caught bag holding. And I really think the crux of all this is to just pick really good stocks, because if you pick bad stocks, then those stocks are maybe not guaranteed to come back up with time. If you have stocks like Coca-Cola, for example, that stock, that company is not going anywhere. It's not going to go bankrupt. You know, even if you get caught holding shares during a recession, just hold it out, because over time it's going to come back up to your cost basis and probably go even higher given enough time. But that's why I really harp on picking good stocks. I don't like to pick speculative companies that maybe could go bankrupt in a year, because then you lost all your money basically. So that doesn't make sense to me. That's too much risk. And the kicker is that a lot of these speculative stocks have higher premiums, so they're attractive. But for me personally, I don't want to take on that much risk. I'd rather make slow and steady and consistent profits than try and hit home runs every time. That's just my strategy and how I like to play these options. But leave a comment below. Let me know what you think, and what are your strategies for a potential downturn in the market. Let me know if you agree with me or disagree with me. And I'm curious to see if you guys had any tech stocks in play this week and how you're doing. I'm assuming if you're like me, you were scared yesterday and early this morning, but you're feeling a lot better this afternoon. And hopefully tech either trades sideways or goes back up for the next 2 days, end of day Friday, in case you have any options expiring this Friday. But as always, if you have any other questions or comments, you guys are very good in the comment section. You ask really good questions, and I can see people are being helpful towards one another. So I really appreciate that, and I think we've built a good community. And like I said, I think if we get a lot of people that are interested, then we can start talking about getting a Discord server going, so we can kind of communicate more in real time as opposed to just through the YouTube chat, because I can check it every now and then, but you know, something like a Discord, you can get alerts on your phone and you can talk more in real time. So I think that would be pretty cool and pretty fun. But as always, you know, drop a comment below, smash that subscribe button, hit that like button, turn on notifications. And if you have any other questions, feel free to leave them below. Like I said, I read every comment and suggestion. And as always, happy trading.